You know that feeling, right? You really want to get your financial future sorted, like build some actual wealth, but then, bam, you're just flooded with all these different options.
Or, yeah, totally contradictory advice.
Exactly. One person's shouting real estate, another says crypto's the future. Someone else is just like, save every penny. It can be pretty overwhelming.
For sure.
So today we're doing a deep dive. We're going to try and cut through all that noise and really understand the practical, proven ways to build prosperity.
Mm-hmm.
We've got this great guide to walk us through it, and I'm actually really excited to, unpack it together.
Yeah, me too. And our goal here really is to pull out the most important nuggets of knowledge from this guide.
Right.
Think of it like a shortcut, getting you well-informed, giving you clear, actionable stuff. Hopefully a few of those aha moments about how wealth building actually works.
Okay, so this guide, it lays out 10 well-defined and effective ways to become rich. Sounds promising. Gives us a pretty clear structure. Yeah. We'll go through them one by one. Yeah. But I'm already wondering, how do these connect? Do they build on each other? Because it's rarely just one thing, is it?
That's a great point. And often you'll see, even though they seem like distinct paths, there's often an underlying principle, like creating value or, smart ways to use capital. They definitely weave together.
Okay, I'm ready. Let's dig in. So, first up, the big one. The one that feels like the ultimate dream for a lot of people, maybe the riskiest too, starting your own business.
Right.
Our guide defines this pretty broadly. Launching a product, a service, meeting some kind of market need. Could be a local shop, could be a tech startup, anything in between.
And the reason this path is so potent, the core idea is leverage and scaling. Potential for unlimited scaling.
Unlike a regular job.
Exactly. In a job, your income is usually tied to your hours, right?
Yeah.
But a business, it can deliver its solution and its product, whatever, to thousands, maybe millions, without your direct effort increasing proportionally. That's the key to real scaling. Whether it's software or a chain of cafes or, a clever process, if you solve a big problem for enough people,
your income can grow exponentially.
Precisely.
That leverage idea, that's a huge difference. So the guide says, find a problem, build a solution, test it, market it, expand. Simple steps, huge undertaking.
Mm-hmm.
They mention big names like Elon Musk, but also local businesses growing or even someone selling crafts online. But here's a question. How do you know if the problem you think you found is actually, valuable enough for a business? People must get that wrong sometimes.
Oh, all the time. That's a classic mistake. People fall in love with their solution before they've really confirmed people care about the problem. They build something cool, but nobody actually wants to pay for it. It doesn't solve a real pain point.
So the guide's focus on problem solving first is key.
Absolutely vital. It grounds everything in creating genuine value. It's not just selling stuff. It's, providing something people really need or want. And yeah, it takes huge commitment. Failure rates are high, but the potential upside, unmatched.
Okay, so entrepreneurship, high risk, potentially massive reward. But maybe not for everyone. Or not right now.
Oh, understandable.
So for a different kind of leverage, maybe diversifying income, the guide moves towards making your money work for you.
Yeah.
Strategic investments.
Yes. Making your capital productive.
And first stop, real estate. Pretty classic. Buying, renting, selling land or property for income or profit.
And real estate, it offers this sort of dual benefit, which is quite attractive. You get passive income, right? Rent coming in, hopefully without too much daily effort.
Hopefully.
And then you also get potential capital gains. The property value goes up over time. You sell it for more than you paid. Plus, it often acts as a hedge against inflation.
Meaning its value tends to keep pace or beat rising costs?
Generally, yes, over the long term. Now, how to start? The advice is usually research your local market, start small, maybe a single flat, a small plot of land, use loans smartly, and crucially, make sure the cash flow works. The rent needs to cover expenses.
Right.
Connecting it back, real estate gives you tangible assets, something solid. It's often seen as a bedrock for long-term wealth because of that income and appreciation potential.
Makes sense. But that initial chunk of money needed for a down payment, that's a big hurdle for lots of people, isn't it? Does the guide touch on getting past that beyond just start small?
It does sort of lean into starting where you can, so maybe house hacking, renting out rooms in your own place, or looking into things like REITs, real estate investment trusts.
Oh, like stocks, but for property portfolios.
Kind of, yeah. You invest in big property portfolios without owning the buildings directly. So small can mean different things. Creativity with financing, partnerships, that can play a role too.
Okay, so real estate is tangible. The next investment path the guide highlights is maybe more accessible for getting started, the stock market.
Yes, buying pieces of actual companies.
Right, buying shares, benefiting from their growth, maybe getting dividends, or just the share price going up.
Then the real power here, it comes down to two main things. Compound interest your returns, start earning their own returns.
That snowball effect.
Exactly. It accelerates wealth over time. And second, the stock market, historically, over the long run, has tended to outperform inflation and basic savings accounts significantly.
So how does someone actually begin? It seems intimidating.
Well, the key is learning the basics. Things like index funds, they're a great starting point. You get broad market exposure, diversification, usually low cost, or blue chip stocks as big established companies.
The household name.
Often, yeah. The advice is start small. Don't put everything in at once. Reinvest your profits or dividends. And crucially, stay consistent. Keep adding money regularly.
That consistency thing again. It feels like a recurring theme.
It absolutely is.
You mentioned compounding, and that makes me think of, someone like Warren Buffett. Decades of steady investing in good businesses.
The ultimate example of consistency and long-term vision.
But how do you do that? How do you stick with it when the market tanks or, life just happens and money gets tight?
Yeah.
How do you maintain that consistency practically?
That's where discipline really comes in. And automation helps massively.
Oh, set it and forget it.
Pretty much. Set up automatic transfers from your bank to your investment account. Every month, same amount. It takes the emotion out of it. You invest whether the market's up or down.
Dollar cost averaging.
Exactly.
Okay.
And it lets that compounding magic really work over the long haul, even with all the volatility.
Okay, so investing needs capital. Starting a business needs capital.
Yeah.
Where does that initial money come from? Or how do you just generally earn more? The guide has an answer. Learn and master a high-income skill.
Yes, a skill that companies or clients are willing to pay a premium for.
Like what? What are examples?
Think software development, specialized copywriting, digital marketing strategy, high-level consulting, data science.
Yeah.
Skills where demand is high and supply might be limited.
And why does this work?
Well, it unlocks better jobs, higher salaries, or really lucrative freelance gigs.
Mm-hmm.
You can earn significantly more per hour or per project.
Makes sense.
How to start. Pick something you're interested in, but also check the market demand. Take online courses, practice constantly, build a portfolio to show what you can do, and then market yourself. A good freelance UX designer can easily clear 6 figures working remotely these days.
Wow, okay. Now, what's the difference between this and just starting a business? It sounds kind of similar.
That's a great question. The key difference is, with a high-income skill, you're usually selling your expertise directly, trading your specialized time and knowledge for money.
Yeah.
A business, as we discussed, aims to scale beyond your direct labor. You build a system, a product, a team. This skill path is a fantastic way to rapidly boost your income, maybe to get the capital for those other paths, without the full overhead of a business.
Got it. So increase your earning power first.
Yeah.
Which leads nicely into the next point, which, well, it sounds a bit boring sometimes, maybe. But the guide highlights its power. Live below your means and save aggressively.
Ah, yes. The classic. But honestly, maybe the most universally powerful.
Spending less than you earn, saving or investing the difference. Consistently.
The logic is just, well, it's simple math, really. Wealth is built in the gap between what comes in and what goes out.
Right.
The bigger your savings rate, the percentage of your income you save, the faster you can deploy that money into investments and grow your wealth. It's not just about earning more. Controlling what you keep is critical.
So how do you actually do that? Beyond just don't buy the latte.
Track your expenses. Ruthlessly cut unnecessary costs, subscriptions you don't use, impulse buys. Automate your savings. Just like with investing. Send money directly to savings or investment accounts on payday. And the big one, avoid lifestyle inflation.
Meaning, don't spend more just because you earn more.
Exactly. You get a raise, great. Increase your savings rate. Don't just upgrade your car or apartment immediately. That example in the guide is really striking, isn't it? Earning $40K a year, but saving half.
Becoming a millionaire in under 20 years, yeah, that's genuinely surprising. And motivating.
It shows that your savings rate is often the biggest lever you can pull, especially early on. You have direct control over it.
It's not just about tiny cuts. It's a fundamental shift in how you view your money.
Precisely. It's about designing your financial life deliberately. And that mindset, that control, it flows right into the next strategy.
Which is creating multiple income streams, the portfolio approach to earning.
Exactly. Not putting all your eggs in one basket.
So, having more than one source of income, your main job, maybe some freelance work, investments kicking off cash, a side business.
And this isn't just about getting more money overall, though that's part of it. It's fundamentally about resilience, building financial stability. Well, it reduces risk, doesn't it? If one stream dries up, you lose your job, a freelance client disappears, you have others to fall back on. It increases your total income potential, obviously, and it just provides that safety net.
Okay, so how do you start building these streams?
Keep your day job, for starters, usually. Then add a side hustle, something you can do evenings or weekends. Invest in dividend-paying stocks, like we mentioned.
The companies pay you regularly.
Yeah, a share of their profits. Or rent out assets, a view on a spare room, your car when you're not using it, maybe even specialized equipment.
The guide gives an example, like a teacher.
Yeah, a teacher who also tutors online, owns some dividend stocks, and maybe wrote an ebook that sells passively. That's 3 streams right there.
You can really see how these strategies start to link up now.
Absolutely. Master a high-income skill maybe allows you to save aggressively. Then you use those savings to invest in stocks and start a small side business. It becomes a virtuous cycle. Multiple streams build that financial safety net while accelerating the whole process. They're rarely used in isolation.
That makes total sense. Okay, moving into some maybe more modern feeling approaches. Number 7, build and monetize a personal or business brand.
Leveraging reputation and audience.
Creating a recognizable identity, a platform online or offline, and using that visibility to sell things, get sponsors, offer services.
Yeah, and a strong brand, it's more than just a logo. It's about trust, credibility. It naturally attracts attention and opportunities because people connect with, well, people or identities they know and like.
So how does one build this brand?
Choose a niche you're passionate or knowledgeable about: travel, tech, finance, cooking, whatever. Then create valuable content consistently, blog posts, videos, social media updates. Build an audience.
And then the monetization comes.
Through offering products, maybe merchandise or digital goods, offering services, consulting, coaching, getting sponsorships, using affiliate links where you recommend other products. Think YouTubers, Instagram influencers, niche bloggers. They build an audience first, then monetize that attention and trust.
It's quite powerful, isn't it? How personal passion or expertise can directly translate into income today.
It really is a defining feature of the modern economy, and it connects closely to the next one, number 8. Create scalable or passive income products.
The earn while you sleep dream. Build it once, sell it over and over with minimal ongoing work.
That's the idea. The effort is heavily front-loaded. You put in the work to create something great, and then it can potentially generate income for years with relatively little extra input.
Like what kind of products are we talking about?
Digital products are prime examples. An ebook, an online course, a software tool or app, a template pack, something you can create once and sell digitally automatically to a global audience.
So you identify something you can teach or provide digitally.
Right. Package it up, then sell it on platforms like Udemy for courses, Gumroad, or Amazon for ebooks, your own website. An online course created by an expert could sell worldwide for years.
Now, how is this different from, say, starting a business again? It feels related.
It is related, but the focus here is specifically on the product being the main income generator, designed for scalability and low ongoing effort. A service business often requires your continuous time. A passive income product, ideally, doesn't. You create the asset, then focus on marketing it.
Okay, that distinction makes sense. Asset creation. Then we shift gears a bit. Something less about money directly, maybe, but hugely important. Networking and building strategic relationships.
Hugely important, often underestimated in purely financial terms.
Forming connections with people who can support you, mentor you, maybe invest or collaborate.
Because opportunities so often come through people, not just algorithms or job boards.
Right.
The right connection, it can genuinely open doors you didn't even know existed. A new client, funding for that startup idea, maybe just crucial advice or a new perspective.
So how do you do this effectively? It's not just collecting LinkedIn contacts, right?
Definitely not. It's about genuine connection. Attend industry events, virtual or in person. Join online communities in your field. But the key is offer value first. Help others, share insights, make introductions before you ever think about asking for something.
Be a giver, not just a taker.
Exactly. And nurture those relationships over time. It's not transactional. The example of an entrepreneur meeting a venture capitalist at an event and getting funded, that happens because a relationship, however brief initially, was formed.
It's that who you know factor, but reframed.
Yeah.
More intentional, more reciprocal. building real connections, not just using people.
Precisely. It's about building a supportive ecosystem around you. Mutual growth.
Okay, which brings us to the final pathway, number 10. And this one feels, well, foundational. Be patient and consistent.
The glue that holds everything else together.
Yeah, it sounds less like a separate way and more like a requirement for all the others to actually work.
Yeah.
Sticking to the plan, discipline, long-term view.
You've nailed it. And the guide probably lists it as a distinct way because, frankly, without it, the other 9 paths they don't pan out. Or the chances are much, much lower.
Why?
Because wealth building, especially through things like investing or even business growth, relies heavily on compounding. Time is your biggest ally. Small, deliberate actions, saving that percentage, investing that amount, learning that skill repeated consistently over years and decades, that's what creates massive results.
Not the get-rich-quick schemes.
Exactly. Those are usually craps. The real path involves setting long-term goals, building sustainable habits, saving, investing, learning, and just sticking with them, patiently, consistently.
That example of investing $500 a month.
Yeah, in simple index funds for 30 years could realistically lead to over $1 million.
Wow.
The math works. The challenge isn't knowing what to do, it's the discipline to keep doing it when results aren't instant.
It's the critical ingredient that turns the potential of the other paths into actual reality.
Couldn't have said it better myself.
Wow. Okay, so this deep dive, it really shows wealth building isn't just one thing. It's multifaceted.
Definitely.
You've got the boldness of entrepreneurship, the steady growth from investing, skilling up to earn more, the absolute bedrock of saving, and then leveraging relationships and digital tools. It's a lot, but it feels, actionable. And you can see the connections.
Yeah, how they reinforce each other. And that final tip from the guide really ties it all together, doesn't it?
Remind us.
Becoming rich is not just about earning more. It's about managing, multiplying, and sustaining your money wisely. Start small, be consistent, and never stop learning.
Managing, multiplying, sustaining. Start small, be consistent, keep learning.
It's that holistic view. All these pieces work together. They build on each other to create that resilient financial future we're all aiming for.
So for everyone listening, what stands out to you? Was there one pathway that really sparked something? Or maybe it just confirmed you're already on the right track, gave you a bit more clarity or motivation? Whichever it is. The point is, the tools and strategies are out there. You can start building.
And maybe the biggest takeaway from this deep dive is that while we've talked about 10 distinct paths, the real magic might be in figuring out how to combine them.
Like a custom blend.
Exactly. How to adapt them over time, based on your life stage, your skills, your opportunities, like building your own diversified portfolio, but with life strategies and investments. Maybe the most powerful path is the unique one you build for yourself, weaving these different strands together.
That's a fantastic thought to end on. A personalized pathway to prosperity.
Something like that.
Well, thank you for joining us on this deep dive. We really hope you're walking away feeling better informed and maybe even a little inspired to take that next step.